Well, good afternoon and welcome to the Market Wrap for Thursday, the 22nd of January. And look, today the Aussie market managed to snap its 3-day losing streak. So it was our first gain of the week. We ended the day up by around 0.75%. So that was, of course, our first gain of the week. We did follow that positive lead in from Wall Street after President Trump ruled out the use of military force over Greenland. And that was after reaching a framework of a future deal. So that news definitely helped our market in the lead in today. Interestingly, our market did seem to look past today's job numbers in a choppy session of trade. So we did see a surprise jump in the jobs numbers for December, 65,200 jobs added, while the expectation was about 30,000, so more than double. This does follow a surprise drop in jobs in the prior month in November, when the Aussie market unexpectedly shed 21,300 jobs, but still December's jump more than offset that unexpected fall in November. The unemployment rate dropped to 4.1% from 4.3%, unexpectedly dropping to a 7-month low, while the expectation was for a slight uptick to 4.4%. So I guess this signals that the Aussie labour market remains healthy, particularly because the jump in jobs were primarily driven by full-time employment. So in terms of what this means for interest rates, before that data came out, there was about a 27% chance of a rate hike in February. After that data dropped, it jumped up to a 60% chance of a rate hike. So traders now reckon there's a bigger chance of a hike as opposed to the RBA leaving rates steady in less than 2 weeks' time. Something, of course, to keep in mind, though, is we do have quarterly inflation data coming out next Wednesday, which the Reserve Bank will be watching very closely. So depending on what comes out of that data, those expectations could potentially shift again. But of course, we're really in crunch time now, where the RBA has quite a tough decision on their hands. If they do decide to lift next month, that would be the first rate hike since November 2023, and that could take the cash rate to 3.85%. At the moment, traders are fully pricing in a rate hike in May, and they expect 2 hikes before the end of the year, of course, with those persistent inflationary pressures. Now back to today's market locally, we did see only 2 of the 11 sectors actually losing ground. You can see tech down by around 0.25%, the materials sector down by 1.7%, weighed down by some profit taking in gold miners and also a 5% drop in Fortescue shares. But we did see all of the other sectors improving. In fact, our largest sector, financials, did quite well, lifting by around 2%, and energy stocks also shooting the lights out, lifting by close to 3% in today's session. Looking at some individual winners, Rio Tinto climbed to a record high after the world's largest producer of iron ore ended 2025 on an operational high note, as shown in its results yesterday. So that followed through to today's session and it hit that record high. Penfolds maker Treasury Wines had a good session after a well-known businessman and French billionaire appeared as a substantial shareholder, now owning a 6% stake in the company after slowly building up his stake over time. He's not confirmed his intentions, but there has been speculation around the potential for a private equity takeover for months now, after the company's share price slumped to a decade low at the end of last year amid weaker than expected trading results. Elsewhere, Santos said they're expecting a meaningful lift in production in the 12 months to December. They expect to ship their first cargo of LNG from its $6 billion Barossa gas project as well. So Santos shares up over 5% today, and South32 hit its highest level since April 2023 after delivering better than expected December quarter results. We also saw FY26 production guidance was reaffirmed, so South32 shares up over 5% as well today. On the losers list, though, Northern Star was at an all-time high yesterday, but it was a very different story today. We saw the gold miner pull back after gold prices fell from record highs, and of course, as trade tensions simmered down, and this was after Trump's comments about Greenland overnight. So some profit taking happening there, and at the same time, Northern Star revised its full year guidance lower following a soft quarter due to equipment failures and downtime. So as you can see, see Northern Star down 8.5% today, and that really was reflected in many of the other gold miners as well, which saw many double-digit losses in today's session. Of course, falling from record highs. The gold subsector did hit that record high yesterday, and Fortescue took quite a hit. Its share price down over 5% after disappointing investors with higher costs despite posting record iron ore output. Now, the Aussie dollar has rallied to its highest level since October 2024. It's currently buying 68 US cents on the back of that Aussie jobs data. Looking ahead to tonight, we have more US companies out with reports. We have GE Aerospace, Procter & Gamble and Intel. We also have an update on US economic growth and also inflation, the Fed's preferred measure of inflation. That'll all be released tonight. Tomorrow, the Bank of Japan will hand down its interest rate decision, with rates currently sitting at a 30-year high. And we also, on the local front, have Alcoa out with their FY25 report. Have a nice night.